would help if I was unmuted. Hi guys, welcome to today's live stream. Let me know if you can hear me okay. That's what I was asking. I've moved my microphone to a different spot, so don't know whether it's weaker. Probably will be weaker because I'm not as close. It is quite far away, so hopefully you can still hear me. We're going to be talking through the Bank of England interest rate decision. We're going to talk about the impacts that has had on the pound, and we'll have a little look at the markets associated with it as well. And we'll go from there. So it looks like we are going to see a little bit of pound downside. You know, when we look at the hourly chart, when the announcement came in, we had this really nice sort of downward candlestick from this. Pretty much all day we've been down since the kind of open of the European markets. The market went to sell pounds, and that was on the anticipation of this rate cut. Now that we've had it, are we going to see further downside for the UK? Now, I was a bit conflicted on the pound this week. I did quite like the idea of buying pound just from the commitment of trader point of view, but we know that didn't really give us any kind of setup anyway. One market I was looking at was potentially pound Aussie continuing this phase higher, but that hasn't done anything. Market is still very much in that downward trend on the 4-hour time frame, so I've not been involved with anything. So that's why we put those conditions in place. But yes, the UK coming under a little bit of pressure right now. Pound coming under a little bit of pressure. Thank you, Bruce. Hope you're doing well. Let's have a little look at what happened then. So let's scroll down. So essentially what we had, if I can just, let me just try and zoom in a little bit so you can see that a little bit better. So just the important things to note. First of all, Bank of England cut interest rates, okay? If this wants to let me highlight. Bank of England cut interest rates to 4.5% from 4.75%. That is the lowest since June of 2023. Now, what's really important out of the UK, I feel, is growth forecasts. Okay, there's been a lot of talks about this recently about how GDP is expected to be a lot lower. This is partly the reason why we've been discussing sort of pound downside for a little bit, is because of these growth forecasts. Now, the Bank of England slashed its growth forecast to 0.75% in 2025. That's down from a previous forecast of 1.5%. So the Bank of England themselves are suggesting that the growth in the UK isn't going to be great. It's not going to be great at all. The fact that it's going to be lower to 0.75 is quite a significant difference. That's pretty much, well, that is half of what they were anticipating or forecasting previously. So that is a big difference in my opinion. Where's that gone? Page just refreshed, so it just took me lower. What else? Bank of England predicts. There we go. Bank of England predicts that inflation will rise to 3.7% later this year, driven up by rises in gas prices arising from the need to fill drainage storage facilities after a cold winter. So we know that natural gas prices have been rising. They've been on the pullback recently, but obviously that doesn't kind of filter into effect for another few months. So essentially what we've seen is, you know, England and Great Britain paying more for their gas prices, which is going to have a knock-on effect to the consumer. And we know that oil prices, gas prices being higher impacts directly with inflation. Whether it will impact sort of core will be yet to be seen, but that's something that's got to, you know, will be interesting going forward. Chancellor Rachel Reeves welcomed the interest rate cut, but she is still not satisfied with the growth rate of the UK economy. I think she's got to be a little bit careful now, because she has very much been talking about the fact that, you know, growth is something that is on Labour's mind. Growth is something that Labour are going to bring to the UK. But Bank of England have forecasted it's going to be 0.75%. All the forecasts now are going to say that growth's going to be down. She's going to be hammered on that. She's going to be hammered on that aggressively. So she's got to be a little bit careful with how she plays this now, because it's not going to be as simple as her just continuing to drum up that, yes, we're going to see growth. We are going to be a party that brings growth to the UK. She's got to be a little bit careful now. So what else have we seen? Boosting global increase in demand. Okay, they're talking about AI. You know, the UK needs to go into AI. That's probably one of the things that the UK aren't really in at the moment. I don't think there's many companies out there that are from the UK dealing with AI at the minute. So I may be wrong, but I'm not really seeing anything in headlines. Bank of England is asked whether it believes its own forecasts, and why is the UK having such a tough time getting inflation down. Some factors, higher water bills and bus fares, but essentially as well, wage growth was fairly high, but that needs to come down, which it has come down. But wage growth was pretty high in the UK as well. How many cuts will there be this year? This is something that we need to look at. Someone said in the press conference that Goldman Sachs had predicted 6. I saw that they predicted 4, so I don't know where he got 6 from, but you know, I think basically, here we go. Simon French, chief economist of Pan-Europe, thinks there will be 6 cuts this year, with the pace of cuts ramping up in the summer months. So, yeah, whether they do 6, I don't know, because they've got to be careful of that inflation pressure. But I do think that the Bank of England are going to be the central bank now that really starts cutting interest rates, essentially. Bank says it will be careful, will take a careful and gradual approach to future interest rate cuts, as it weighs up a number of factors that could affect inflation, including threats of tariffs from US President Donald Trump. In its quarterly inflation report, the bank says economic growth has been broadly flat since March last year. And look, the UK economy showed 0 growth at all. So, yeah, essentially, the UK is in a really weird place at the moment. And that's why we're seeing selling of the pound. And I think this is probably now going to be something that is continued. Like I said, I did like the idea of buying pound, but that was more from a commitment to traders point of view. We have been seeing hedge funds sell the pound at levels that were very similar to those back in April of 2024 and back in October of 2023. And you can see that prices have obviously, you know, risen at those 2 points. But is the economic landscape a little bit different now? Could we see those prices fall a little bit further, perhaps? Looking at pound versus the dollar, we can see that we are, you know, trading at this key level, that 125 level. This was obviously a significant level in the past. Market found some kind of support here. Just delete that a second. Found some kind of support and resistance, and the market has come back into that level, found resistance again. Yesterday we closed below, market pushing lower again. So there could be a good chance now pound US dollar is going to continue lower, down to sort of that 122 handle. What I'm going to be looking for with this in particular is how does this affect this kind of weekly outlook. There's a little bit of a skewed market there on the weekly time frame. Daily shows that nice little kind of double top situation going on. So yeah, I'm kind of keen to have a little look at some downside moves on pound at the moment, because I don't think the commitment of traders report signal here after hearing that is probably going to play out. So we'll wait and see, but what I can see happening maybe is a move down into this trendline support, a bit of a higher bounce, and then maybe we can try and look for when that transitions back into another phase there. So pound's looking pretty good to the downside. If we look across the board, pound is down against the Australian dollar. It's down against the New Zealand dollar, which is this resistance level. It's down against the Swiss franc, down against the Japanese yen quite heavily. I did like pound yen to the downside, but, you know, didn't manage to catch a little bit of a move there. And look, what have we been talking about for the past 2-3 weeks? It's Japanese yen. It's the yen for me is the clear market to be buying yen. we're at this really critical point with dollar yen. There was almost this opportunity of either we were going to see this kind of trend continue into the 161 and then a big move down, or we were going to see this 155 level being breached. And that's what we've seen now. 155 has been breached. Trend line support has been breached. Japanese yen, to me, is the strongest currency at the moment. So pound yen downside makes a lot of sense. Makes a lot of sense. If we look at it from this weekly chart, you know, our sort of previous targets when we were trading it before was down towards 185. So maybe we're finally going to see that move now. So pound yen, I think, needs to be on our watch lists a little bit more. Needs to be watched a little bit more closely. And I'm happily going to be doing that. I'm going to be having a look to see if price can continue down into the 186 handle. Pound CAD has come off the highs quite nicely as well. We've reached these. I mean, this is a hell of a range going on here. Very clean range, you know, these highs here. And the market is now coming all the way down. So I don't really see that stopping anytime soon unless we get tariffs from Trump onto Canada again. But at the moment, it looks like we're going to see a bit more downside here as well. Afternoon, Vincent. Hope you're well. Right, guy. Hope you're well too. Let me know what you guys have been up to this week. I have been trading the Swiss yen to the downside. I managed to get an entry yesterday off of this hourly chart move. So I believe this is what we talked about on Tuesday. It does look like the analysis from Tuesday. And I did talk about the potential for this market to break down. That was at 11 p.m. for me. So I didn't catch that move there because by the time I woke up in the morning and got to my charts at 6 a.m., this is where price was. So catch 22 of trading the Japanese yen and trying to trade the yen's strength is the fact that it's going to move in the Asia session. So I ended up just kind of waiting around, and what I saw was that price was very much capped in at these kind of levels here. We saw sellers come in at this point. Market came back up. It retested it. It formed a really nice doji candle. I got short off that doji. Here, let me just put a risk reward on. And this is my current trade right now. So it's looking pretty healthy. It's looking pretty healthy. Stop loss was ATR above that high. I don't have the ATR on here right now. I don't have my terminal opened, but I think it was around 80 odd pips or so in the end. And so that's my trade at the moment. My target is down towards these lows down here on Swiss yen, around 166. So I'm looking to see if I can get a 4-to-1 out of this move. But this is a nice setup. This is something that, you know, really kind of hones into how I think about the markets. You know, we've kind of discussed how you can look at data to then discuss why you want to be in a market rather than just focusing on you know, essentially the chart and patterns, right? Because I think this is where I used to go wrong when I first started trading. I would just scroll through my charts every day and I'd look for patterns, and I would only trade patterns. So one of my very, very first trading strategies was a 20, 50, 200 moving average. And I'd wait for the daily chart to go up into the averages and close outside of the averages. And if I saw that in a trending market, I would trade that. And that was okay. I did about 33% in a year. And that's great. If you want sort of, you know, not to think about the markets, you know, and things like that, great. But I thought there was more, you know, and that's why I ended up doing what I do now. But essentially, what have we got here from a fundamental picture is we've got the Swiss National Bank cutting interest rates, right? So let's actually bring this up on the screen because this is how I would go about, you know, looking at it. Okay, so first things first, we can go to tradesandeconomics.com and we can just have a look at some indicators. Okay, so let's just have a little look at a few indicators. So we're going to do GDP growth rate, interest rate. Okay, we're going to do the unemployment rate, and we can do the balance of trade. Okay, because Japan and the balance of trade is pretty important to have a little look at. So we're going to look at Japan first when it comes to interest rates. And what I'm going to do is I'm going to overlay the Swiss Okay, so Switzerland interest rate. Okay, now they're at the same place, because if you just look at it like that, you're like, okay, well, they're both at 0.5. There's no difference there. But if you scroll out a little bit and just go up to 3 years, what do you notice? Well, the Swiss National Bank are cutting interest rates, right? And they're doing it quite aggressively. So they are cutting interest rates, right? When you look at it from Japan's point of view, what are they doing? They're increasing interest rates, right? So there's already a difference between the two central banks, okay? One bank is hiking interest rates, the other is cutting interest rates, okay? What does that typically mean? Well, it means that if a central bank is cutting, it usually means that the market is not in a great place. If they're hiking, it means that they're in a good place, and they can hike. And a lot of this is to do with wage growth in Japan, and a lot of this in Switzerland is to do with the fact that they're kind of trying to fight deflation at the moment. That means prices are decreasing, essentially below the rate of wages as well. So that's quite interesting to see. We're starting to see that kind of big move to downside. You know, Switzerland trying to create some demand again, not really helping. So that's a big tick to the Japanese yen for me. Big tick to the Japanese yen, because they're increasing interest rates. Big X for Switzerland. Let's go to GDP growth rate as well. So this is what I like to do. I like to have a little look at what the growth rate is in certain places. So we'll check out Switzerland first. Now, Switzerland's growth rate in Q3 of 2024 was 0.4%. And what I like to do is just go onto the forecasts as well and have a little look at where, you know, the economic models of trade and economics kind of see things. They expect growth to fall to 0.3%. But then when you look across, they don't really expect any growth throughout 2025. They're expecting zero growth across the board, around about 0.3, 0.4. So if it misses above that, it'll be a big shock. But, you know, I reckon it's going to stay zero pretty much when you look at the change from quarter to quarter. When we go check out Japan, okay, GDP growth rate. All right, you can see that Japan's GDP growth rate has been a little bit static, okay, so, but it's on the rise, okay. It was fairly low at minus 1.2%, and then it was climbing, okay, and that's what it has been on that trajectory to the, you know, move higher, okay. Then we're going to go to the unemployment rate. So what's the unemployment rate in Switzerland? It's high. It's up at 3%, okay, so they are worried about their unemployment rate because it's moving a lot higher. You can go to Japan and have a look at Japan's unemployment rate as well, which is declining. Okay, Japan's unemployment rate is declining. It means more people in work doing better. So really speaking, Japanese yen is a good currency, right? It's a currency that you would expect the central bank to continue hiking interest rates. If we just go over to Japan's interest rate and just delete Swiss National Bank, click forecasts, we're actually forecasting Japan's interest rate by the end of this year to be at 0.75%. So that's quite significant. That's a big jump for the Bank of Japan, considering the fact that 0.5% is the highest level they've been since 2008. I think that's quite significant. Finally, you can go check out the balance of trade. Okay, so remember, we're just kind of ticking off sort of boxes. Which I'll do. We'll do country and see if it can go that way. There we go. There's Switzerland. So trade surplus in Switzerland starting to narrow a little bit, you know, coming off those kind of highs, but they're typically in a good place anyway. We can go look at Japan's balance of trade as well and compare the two, and you can see Japan's balance of trade much higher than Switzerland's at the moment. So again, we've got those two differing factors going on. So you've got fundamentally the Japanese yen is a strong currency. When we go take a look at the Swiss franc, it's a weakening currency. So every time we get a bit of a bullish run here on Swiss yen, I really want to be short. I want to be short this market because I think that the Swiss is going to depreciate against the Japanese yen. And if we go look at a monthly chart, you know, look at 2023's rise, you know, I could easily see this being eradicated over the next year or so, right? So this is definitely a market we need to continue to keep our eyes on. Earthman, I took Swiss yen as well, but closed early, 40 pips. Wish I would have held. At least you got something out of it, you know. Took the hourly candle, as you pointed out. Nice, that's a good trade, I feel. I would have liked to have taken something a little bit higher up, but, you know, I didn't see that. It was 11 o'clock. I was in bed. So, you know, usually, which is quite unfortunate, really, because at the end of the day, I'll come to the daily charts and I'll go through and I'll update my Forex heat map at 10 o'clock. So if I'd waited one more hour, I would have been able to have nailed that entry in up here. You know, maybe I could have just took the 4 hour when I woke up in the morning, but either way, I saw the hourly was rejecting, waiting for the close, you know, looking for a bit of downside to continue. Well, guys, I'm out of the market since it's NFP tomorrow. I was long euro, pound, and gold. I was in at 282.1, but came out 283.6. Should have stayed in. Yeah, I mean, gold is you know, rising as well. You know, unfortunately, you've come out of that trade, but you followed your plan. Hopefully you followed your plan. And I guess that's a question in itself. You know, I think both of you have just said something there which is quite interesting. I wish I would have held, you know, should have stayed in. How do you stay in these markets for longer? Okay. One thing I do is I try and trail my stop losses down. Okay. Now, when price gets to a certain point what I'm comfortable with, I'll take positions off. Okay. I'll take something off the table and then I'll just trail my stop, because let's face it, we don't know when the market's going to reverse. We have all these kind of potential insights and things like that. We don't really know when something is about to either take off or when something is about to reverse. So for me, managing this Swiss yen trade right now, I would be looking at doing something where, because I traded it on an hourly chart, I can see that the market is creating hourly, let me change the color on that, hourly lower lows and lower highs, right? Which is perfect, which is exactly what I want to see. So essentially what I can do now is reduce my stop loss down to here, okay? I could reduce my stop loss down. I could take off 50% of the trade and then just let it run, okay? And then if it does just, you know, let's say it continues down to here, all I can do is, okay, I'll move my stop loss to that swing high. I'll move my stop loss to that swing high. And then if it does take me out, at least I've come out of the trade with, you know, with something. The thing is, we don't know when these things are going to turn around, right? You could have been looking at this support here, okay? And you could have been looking at the fact that price was bouncing from that support. So you may have got a little bit of trigger finger and gone, I don't like that, I'm out. That's fine. That's fine. It's not going to help you over the long run, though. It's not going to help you over the long run. You need to try and hold your winners as long as possible, okay? So other things that I do, I like to draw sort of trend lines in, okay? And I'd be looking at, okay, if price comes back to this area here but then breaks through it, is that a sign that we're going to start seeing upside? And then I'll put things in place, like I'll move my stop loss to that high there or whatever, you know. But I think the important thing is to trade, you know, consistently and try and do it with a plan and try and have some kind of trailing stop method, because, you know, if you are taking, let's say, on your example there, you took 40 pips out of Swiss yen, but you've got a 40 pip stop loss. You took a 1-to-1, that's fantastic. But what if you lose the next 3 trades in a row? Especially if you're trading at 1% risk, okay? Now, I don't necessarily believe in the 1% risk, you know, overall. I think there are factors that you need to kind of consider when trading a market, where you kind of, your risk should be dynamic, essentially. Your risk should be dynamic. If you've got kind of everything pointing in the direction and you're like, yes, this is everything that I see and everything line up, and then you've got history data that backs you up that this is like a 70% winner when you see this type of setup, then I think that allows you to kind of risk a little bit more. If you're trying to trade a setup and you're like, okay, well, this could be a coin flip. I wouldn't trade a coin flip anyway, but if you do, you've got to say to yourself, I need to lower my risk, because your risk of ruin is a lot higher, okay? Your risk of ruin is so much higher. Yeah, out of it. Do you still use volume profiling in trading? Yes. Yeah, just don't show it that often, because Blueberry is not necessarily on TradingView yet. I say yet because there could be something coming. But I know you've been asking me for that for years. But yeah, it could be coming very, very soon. But yeah, I'll still use volume profile. I mainly use it on the futures market though, Vincent. I mean, it's good to use it on, you can use it on currencies. And obviously I've shown you in the past to use it on currencies, and just, it's mainly for a visual aid for me when I'm kind of talking to you about that stuff, because what I wanted to kind of highlight to you guys in the past was the fact that these big consolidation areas are important areas, because that's where we've had a build up of buyers and sellers almost finding fair value at that point, and then we've broken out of that fair value. So I use it more in that sense to kind of show you that. If you want to really use volume profile, then you need to go and use it on futures charts. So, you know, let's say you want to trade pound US dollar, you can go to pound futures, and you want to be applying your volume to these, because there's a centralized area where you're getting the volume from, essentially. So you want to be using it on the futures. Now, the futures market, or the spot FX, what you're trading, is a derivative of the futures market. Okay, so if you see a move down in futures, that will also be represented on your pound US dollar chart. So you can have them side by side. You can use the volume profile on your currencies here, and then use it in that sense. But they're not very useful, I would say, on, you know, cross currency pairs, because it just depends where you're getting the data from. That's what it depends on. Okay. Hi Bongo, hope you're doing well. Please have a look at potential longs on dollar yen. Bongo, I'm sorry, but I will not look at your longs on dollar yen. I don't think that's a good idea. I don't think that's a good idea right now. I've just gone through why I think the Japanese yen is a strong currency. Actually, I think if you go to our YouTube channel, let me just have a look here. Let me go to our channel, get to videos. If you go check out this video, where is it now? It's a little bit lower. This video here, okay, this one, where this currency could outperform in 2025, right? I explain here all the sort of fundamentals that could potentially, you know, drive the Bank of Japan lower. Second. Adverts, eh? But yeah, essentially what we have a little look at in this is, first of all, we have a little look at what's going on in terms of interest rates, right? So this is the highest level that interest rates have been since 2008. We have a little look at inflation pressures as well, the inflation rate rising in Japan as well, which is always going to potentially create that kind of move where the central bank has to hike interest rates because inflation's moving higher. They want to try and control the pace of inflation, but inflation at the moment is growing in with wages. We obviously had the situation with Donald Trump as well, and I think I talk a little bit about how oil prices correlate with dollar yen downside. So you have a little look at this where I was talking about the fact that if oil prices continue to sort of push lower, you could see that you know, move down as well. So we're starting to see oil prices coming lower. That's having an impact on Japan as well, because the reason is Japan import pretty much all of their oil. So lower oil prices is really good for the balance of trade of Japan. So that's a really good factor for it. No worries, Bongo. You know what I'll do? I'll hit the share button. I'll pop it in here now, and then you can open it on another tab or something and have it there at the end. But yeah. Hello, Michael. Hi, John. How often are you live on YouTube on a weekly basis? I try and do 2 days a week. So Tuesday and Thursdays, 2 p.m. GMT is when we do our live streams at the moment. Let me know if this, I've always done it at 2 p.m. GMT because it's when the American market starts to come on. I mean, you know, 2:30 we get the US Open. So I try and kind of do it because of that. But if you want it to be later, let me know. If you want it to be earlier, let me know. I'm always flexible to change. But yeah, I just think from fundamental perspective, yes, the dollar could still perform quite well this year because of tariffs. But if we go take a look at the dollar index at the minute, you know, it's struggling really, isn't it? This week has been a bit of a range-bound week. And I think this is what we're going to get from a Trump administration. We're going to get a very range-bound situation, and based off uncertainty. And does the market like that? I don't know. I don't know if it does. Look at volatility, spiked up. It's starting to come off a little bit this week, which was nice. I started to buy into the S&P 500 the past couple of days. I'm looking at the S&P 500 now. So just to kind of answer your question, Vincent, you know, of like still using volume and stuff like that, this is a really good place to do that. This is the S&P E-mini futures. And yeah, I was basically buying into this yesterday and the day prior. So these were my long positions here, long positions here. Yeah, essentially was looking for some upside to the S&P 500 in line with volatility moving down. So this is what I was showing you before. Again, actually, if you want to check it out, where is it? I've moved it up there. If you come to our channel again and just have a little look at this video here, how to trade uncertainty. I did a video on this as well, you know, how you can use the movements on the VIX to trade the S&P 500, okay? So we had a big gap in the S&P, big gap in the S&P. Now, the problem with is volatility. When volatility spikes, it doesn't usually stay high for that long, okay? And you can see that price of the volatility index came back down. How did that reflect on price? If I just grab my mouse, you can see that this area here was this downside there, but this big gap was on Monday. And if we have a look at what happened to the S&P 500 on Monday, we had this huge gap to the downside, right? Which was this, sorry, this Friday gap there, Friday going into Monday session. That was this gap here on the S&P 500. Look how volatility has since just started to roll off and continue to roll off. Look what happened to the S&P 500, just rallied, right? So basically what I've been doing Tuesday, Wednesday, is buying dips on the S&P 500 on the US Open, really. So we had this like nice little double bottom. Market found support at VWAP. I went long. Down in here as well, market broke VWAP, stayed above it. I went long. Come out of the highs because it was this point of control in here. But I could have held that really because volatility was still moving down, and that has seen prices increase, okay? If we go to take a look at last Monday as well, which is this gap in here on the VIX, what happened to the S&P 500? It moved significantly to the downside, right? I'm just going to shift this over a little bit, okay? This downside here, what happened was volatility spiked, it then started to roll off. What happened to the S&P 500? It rallied higher, right? And you can see this is the volume profile, point of control, ping, bounced straight off of it, okay? We had area of volume in here, ping, straight off of it, okay? Because we're having these moments where volatility is rising aggressively, but volatility doesn't stay high very long, and it starts to come off. That to me is an edge, right? When you see volatility pop higher, can you try and get on the back of that potential move? So at the moment, volatility is still very low, below the 50 moving average here. This to me would be more upside to the stock market, although I'm pretty sure we've got NFP tomorrow, so that could be a negative for trying to do anything here. But yesterday we had data. The data kind of pushed price into the VWAP. Price held the VWAP and then continued to push higher. So yeah, I'm looking for potential opportunities here today, but it looks like it's what's known as a balanced day. So that means the market is ranging at the moment here. So I'll see if there's any kind of catalyst. If volatility continues to fall, though, I expect to move up to this volume area up towards the 6,100 point. But yeah, that's how I'm still using volume profile and things like that. Current time is perfect. Just don't want to miss next live. No worries. Current time is good. Okay, that's cool. Yeah, but also, you can use the volatility index, like I said before, to try and trade other markets. You can take a look at the Japanese yen and things like that. I mean, volatility falling and the yen gaining strength is not typically what you see. But like I said, there's other factors that are driving this market down at the moment. So yeah, we'll keep an eye on those right now. But dollar pairs to me at the moment are not appealing, right? I've done a video on dollar CAD that's coming out tomorrow, just kind of discussing the situation with dollar CAD, because don't get me wrong, I like the fact that it's up at these 2020 highs. If there was no Donald Trump in power and there was no trade war tariff going on and things like that, this would have been a very good short for me. I would have been looking to get short here. But because of that situation, I just don't know where the market's going to go. I don't have a good judgment of where price could go. So obviously I never know where price is going to go, but I like to try and stack the odds in my favor. I don't know where that is in this situation. The only positive I could say for dollar CAD moving down is the fact that Trump has put a pause on tariffs for 30 days. That is the only good thing I can see right now. From the point of view of Canada's economic projections, their economic growth is actually forecast to grow despite these kind of tariffs. If we go take a look at what happened, let's go to indicators. And we'll go countries, and we'll go to Canada and have a little look. So if we just go to GDP growth rate for one, we'll go to the forecasts. Forecasts are suggested that we are going to see an increase in that growth rate. So, that's a good sign, right? So Canada's GDP growth rate is projected to trend around 1% in 2025, 0.8% in 2026. So Canada are looking for growth over the next year. The reason kind of why that is because they've brought interest rates down, okay? And they're doing that fairly aggressively. They've come down from 5% down to 3%, so 200 basis points or 2% since May of last year. So they are continuing to cut interest rates, which is fine. The reason really behind those interest rate cuts was the fact that unemployment was still fairly high, right? So I wanted to try and bring down this unemployment rate. So if you go to a sort of a 5, maybe even a 10-year outlook, we were at 6.8% in November. The last time it was kind of that high was 2016. 2016, it got to 7.2%. So February 2016. Let's have a little look at how interest rates did in 2016. This is 2017, 2018, 2016. They left interest rates fairly low at 0.5%. Okay, so it actually came down from 1% down to 0.5%. So they brought it down a little bit. Obviously, times are much different now. with regards to inflation. And again, if you look at the inflation forecast, inflation is expected to climb a little bit to 2.2%. So maybe the Bank of Canada have got to try and hold back on cutting rates as aggressively because they won't want to spark too much inflation. But I mean, 2.2% is not a problem. Anything above 2.2%, okay, maybe you've got to question that. Anything above obviously 2.7 would be pretty detrimental, because if you look there, 2.7, these were considered high figures. Central bank target 2% and below, right? But that could change over the next year or so. It could be probably, you know, like I said, that 2.7% to 2% is probably a good threshold for them. What about CAD COT reports? Let's go and have a little look. There's currencies, non-commercials, and we can have a little look at CAD. Have a little look at the large speculators. So yeah, they are still they're kind of coming off of their shorts a little bit, but they were heavily short at similar levels to what we saw here. Okay, now this was obviously the trade that we talked about back in August, where we talked about getting short dollar CAD in August, and that was the really nice trade off of there, because hedge funds had been selling at levels we hadn't seen before, right? If I just zoom that out, this data goes all the way back to 1986, and they were selling at levels that we haven't seen ever in history. So, you know, that to me was a big signal that we were going to see a reversal in price. We had it, but then we had the Trump situation and the buy that we were looking at on the US dollar, and then yeah, CAD prices just fell off a cliff. So yeah, I mean, now it looks like it's kind of forming that to the reversal. Hedge funds are starting to buy into it. One thing that I did point out in the video coming out tomorrow was actually small speculators. So small speculators usually pile into a move towards the end of a trend. And what I found was quite interesting was the fact that they are now, you know, shorting at levels like they were in 2020. So obviously 2020 was a bit of an outlier because price moved very, very quickly in a short space of time. But, you know, they were selling CAD futures at very similar levels to what we're at now, right? So that's quite interesting to see. The only other time they've been at these kind of similar levels as well was 2019, where we had kind of two moments here out there. And then we've also seen it back in 2017, which was here. So, you know, this could be a sign that we're going to see that bit of reversal in those CAD futures, which would be dollar CAD downside, because they are piling into potentially the end of the trend, right? And now this is a very, very significant level. So if you look at this weekly chart, it is a very significant level. Market has been here in the past. That to me would be, you know, just naturally you're like, that's got to be a good buying point, right? Because we've come off of these levels in the past. So I'm not kind of writing off dollar CAD, to be honest, but at the same time, it's very tricky to trade, because I do feel that if Trump does come out in, I don't know when it's going to be now, probably 20 something days time, and goes, actually, we're going to go ahead and tariff Canada, I could see CAD getting weaker again. So it's just if you want to play that risk or not. It's just if you want to play that risk. But, you know, for me, naturally, I want to be like, yeah, I like the idea of being short here because of those big levels in the market. But it's whether it makes sense from a, you know, risk point of view. Maybe if we get like a few more days up here, and then, you know, I'll try and maybe get short around this point if we do start to see the right things. But it's going to be difficult. And if I do trade it, it's probably going to be at a low risk because of the risk of the market just turning around on a dime. Any questions so far, guys? Let me know. Just getting involved with a bit of a move higher there on the S&P. The volatility index is coming off a bit. See if we can get in that value area there. What other markets can we look at? Swiss franc. I do like Swiss franc shorts at the moment. I was in a long trade of dollar Swiss on Monday, and then I closed it out after we gapped higher. So basically I took the break of this move here, ended up going short long last week, held it over the weekend. Market spiked up into these highs. I said to myself, thank you very much, I will take that, and I took 50% of my profit off here, and I moved my stop loss to this low here. And then when the market kind of bounced up again, I moved my stop loss here. So I just about got out for break even on the second part of the position. But yeah, I was basically looking at the fact that we broke this trend as well. Market just fell to the downside, so I wasn't really bothered about holding this too much at the same time. Are you going to be holding trades over the weekends? It depends what market it's in. Swiss yen, I think yes. So depending where Swiss yen kind of closes on or tonight, I'll be kind of judging this one. So I'll have a little look at the daily chart here and say to myself, you know, where could I place my stop loss? But I think Swiss yen's okay to hold over the weekend. There's no real kind of big data coming out that's going to impact these two markets drastically. But if it's anything to do with the dollar, I don't think I'd hold it over the weekend anymore. I think I got lucky with dollar Swiss, to be honest. I've got lucky that Trump is the way Trump is, and the fact that he wanted to tariff people, and he wanted to tariff CAD and that. But I wasn't, you know, it would have been good if you were dollar CAD long on that initial move open. But I remember watching it on Sunday night, opening gap higher, and I was like, oof, you know, that could have easily gone the other way. I could have been on the other side of that. Looking at euro yen shorts, euro kiwi shorts. Euro yen I like. Again, I think anything to do with the yen at the moment is a good market to look for. It does look like we're approaching some area of support as well, down at this kind of 156, 155 area, maybe down sort of these areas here. You know, down in that zone there looks pretty good for euro yen prices. I'm not going to be able to get short right now because we're in that primary phase, so I need to wait for price to kind of come back maybe and get short on a break of trend on the lower time frame. So, you know, looking at the hourly, I can see we started to push it, and then we kind of started to break trend here on Tuesday. That'd have been a nice area to start getting involved and see this market continue down. But yeah, I like euro yen. That's not a market that I'm shying away from getting involved with. Euro kiwi is a tricky one because it's at this major swing high. I like it because it's there. Again, technically I like it because it's there, but there's this real kind of battle going on between the euro and the New Zealand dollar at the moment. Euro is potentially going to be tariffed. To what extent, we don't know, but it's coming. So I think there's going to be anticipation of potentially seeing euro shorts because of that. From a New Zealand standpoint, they're still feeling the impact of what's been going on with China and the tariffs on China, because that's one of New Zealand's biggest trading partners. So I think we need to be cautious on, again, Kiwi. Kiwi, Aussie, got to be a little bit cautious on those markets. I still feel that maybe the tariffs with Trump and China are not done with yet. And if they're not done with yet, what could we expect? Could be expecting some volatility on those markets. It's a shame, really, because, I did think towards the end of last year, the Australian dollar in particular would have been a lot stronger than most currencies because of their situation. But, we'll wait and see how that does pan out in the end. I'd probably be waiting for some kind of catalyst to take us through. If we do start to see tariffs coming in on Europe, that would be a good catalyst to seeing the downside against the New Zealand dollar. Maybe we start to see, Trump and China, becoming friends, which I think is what's going to happen. If I was to kind of put sort of an idea of what I was expecting from Trump's administration and China, I think he wants to try and end the war in Russia and Ukraine. I think that would give him big brownie points from general public and whatever that I think he wants. And I think he's going to do that by getting China on board and not tariffing China as aggressively. But I think he's going to immediately he's going to use it as a strong arm negotiation tactic. He's going to go, China, we're going to do 60% tariffs on your goods. The problem is he's going up against China. China can do everything cheaper than the US. And the only person it really impacts in the end is the consumer, right? So, yeah, it's and those sort of importing those goods. So, let's say Costco, for instance, if Costco import a particular good from China, they pay the import on bringing it over into the border. So what are Costco going to do? They're going to raise the prices of those products to the consumer to offset the tariffs. That's how it'll work. But you might use them as a negotiation tool to get China to sit down with Russia and to end the war. And I think if he does that, big brownie points. And, I think that's going to be good for commodities. I think it's going to be good for Aussie, Kiwi, all that kind of good stuff. But that's a big if. That's a big if right now. That is a very, very big if in the market. Let's see if we've got any more data coming up. I don't think we do for the day. Kind of had our big data. Unemployment claims came out at 130, 219, so a little bit higher than forecasts. Other than that, there's not a huge amount. We've got natural gas storage, maybe could be a big one to kind of keep your eye on. A couple of member speeches. Bank of England governor speaking at 9 p.m. tonight. What is he speaking at 9 p.m? The City UK annual dinner in London. Okay. So maybe we'll still see some kind of volume coming in from that. We'll have to wait and see. Right, guys, how long have we been going? 55 minutes. Right, I'm going to leave it there. Thank you to everybody that joined and asked questions, as usual. Really appreciate all your support. And if you can leave the live stream a thumbs up, I would be really appreciative of that. Lets me know that you've enjoyed the content today. Still for me, keeping a big sort of eye on what's going on in Japan. I feel like the Japanese yen is a good market to have a little look at. So currently short Swiss yen, but I do like what's going on over here. If we look at the dollar yen price, dollar is technically a stronger currency, and the yen is outperforming that at the moment. So yen is a currency I'm going to keep my eye on going forward, and I think we're probably going to see a good year for the Japanese yen. So I'm going to leave it there. I will see you all on Tuesday, 2 p.m. GMT is when I'm back on a live stream. So hopefully I'll see you all then, and have a great weekend. Speak to you soon.